A massive bear trap was seen today at market close as we faced our bi-daily closure. There are indications of a continuation to the upside with some obstacles, but a quarterly closure could mean a continuation to the upside for this asset. Welcome back to the channel on this Thursday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill him. What is up, you guys? Thank you so much for stopping by once again. Let's go ahead and dive in to ticker symbol NVOS. And we're actually looking at this on the 12-hour time frame because the 12-hour time frame allows us to see the upside here in the after hours trading, right? Opposed to the daily time frame where it does not show us that. So yeah, what I mean by bear trap is this. Check this out. So very, very apparent larger time frame head and shoulders formation, right? So please go ahead and just notice here that we have that that we had this set up, right? The Bears really thought they had this thing figured out on this one, but they just got massively handled here, right? So this is your potential neckline here for the asset, right? So the downside here was actually respectable, and it made sense as far as the play is concerned, right? So in order to gain that price objective, you take the trend line from the top side of the head all the way down to the neckline, and then you apply it to the bottom side of the shoulder, right? So the right hand shoulder, right in between, and the target coming out of this would have been around 842. So I mean, that would have been a massive loss. But we did have several closures that were particularly there, that were exactly the resistance that we faced before the last capitulation. Right here on this candle here, you can actually see right on top at the high value on the OHLC, you can see right there 840, and the target right here 840, right? So it made a lot of sense for the play to happen, right? Except that the thing that was not banked on was that the bi-daily closure happened at market close, and the problem here is that we built a massive inverted hammer as the last candle as we got that bi-daily closure, and this candle usually signals a potential reversal, right? So that's exactly what happened, right? So you know, if you're not looking close enough, if you're not really looking, then you can get trapped like this, right? So the downside already had happened, right? This is the bi-daily bearish engulfing here. Yep, you got that downside all the way down to this zone here, but that's already a pretty fair downside considering the closure of this bearish engulfing, right? That's already enough. So if we printed then a very bullish inverted hammer here after a downtrend, yeah, you're gonna get massive results after this, right? So the target that we ended up going to here was 5093, which is very similar to the top side that we faced back here on September 13th, right? So it's very nice. And also the fact that we stopped right there is very confluent with the top side of this gap here, right? The bottom side of this gap. So that's just how it kind of goes, right? So if we are stopping there at that gap, we should better probably look at that in the daily time frame, right? So as you can see what that size of that gap actually is, right? So this is where we stopped right here at 5093, and you can see that it's right in between this gap here, which is now giving me the feeling that the asset is trying to get, you know, an actual closure here of the gap, right? We're actually trying to close this at 6123. So, and the 6123 is very confluent. I mean, notice all of this area here using it as support, right? All of this area using as support. It's, I mean, yeah, I do think that the asset is actually trying to make a jump from 5093 to around 6093 from where we could actually face a slight pullback. Actually, it could be a pretty large pullback from there. But the pullback, honestly, if I'm going to be very transparent here, I would watch out because it may come all the way back down to 38 cents to validate the daily support, but of the gap, right? But we still have the 12-hour reversion here at, of course, 5093. I'm just putting it out there like that just in case, right? Just in case, because we could always just ride the waves here. We could always just take profits when they're there, right? Pull out the market, compound, get them in there again, and let's do it, right? Let's ride it. There's no harm in doing that, right? But sometimes, it's just it's a little difficult here to trade these types of assets because this is high volatility. So I would highly encourage my green traders or my beginner traders to stay away from assets like this, right? But the upside is it looks like it's very much possible here. I can definitely see a continuation to that 61.23. If you do feel you have the agility to trade it, go ahead and do so, right? But don't take it from me. I'm not a financial advisor, in fact, so make sure to remember that. So the top side targets here that we actually ended up facing were inspired by this, or were actually taken from this right-angled triangle, right? And the trade is actually known as a descending triangle. So that top side of the triangle from the the hypotenuse here all the way down to the bottom side of the triangle, that's how we got this target here of about 42.61. Of which it definitely reached. This candle right here, top side of it, the high is 44, right? And we were already talking about 42.08, right? So very, very close to the target here, as it did realize that top side of the target. The next thing that we want to know here is that upon the breakout from this triangle, the center of the triangle is another target to look at, right? So the center of the triangle actually ended up telling us that we could reach a target of about 25.49. And you can see right here on this candle here, right at the breakout, that we ended up reaching a high of 26.29 after it was 25.49, right? So very, very, very confluent touches there, and actually playing per the playbook rules, actually. So we got that breakout, right? We came back and validated the test. We broke upside again, and sentiment needed to validate this support again. And then we continued onwards and upwards, right? Created this massive bear trap. Price action continued to the upside. Here is the next thing that we want to take a look at, right? Let's go. I have some notes here for us. Let's go to the weekly time frame and take a look at. And sorry about that, team. And take a look at the EMA 55, right? So this EMA 55 could work as a potential pullback zone. Right, so just in case, right, I'm saying, if we go to the 61.53, then we have the weekly EMA 55 located right down here at 43.52, and it's particularly important. Why? Because that was the take profit of the triangle top side. So there's it's confluent there to the to that moving average, right? So let's just go ahead and kind of put it down like this right here. So this could be that zone to where we can, make price action come up ever so slightly. Then we can come back here, start validating a support at the EMA 55 weekly time frame, then continue onwards here. But I do see another resistance area. So in case we do continue on to the upside, please notice the weekly SMA 100 is located right at that's very close to that resistance level here, right? So I would honestly give this a range of between 91.58 being located right here, right? 91, right there, to this wick here. And I think that would be, I would say 97.32. All right, so that could be the next area of resistance with continued pressure to the upside. Very conditional. Okay, so let's go ahead and jump back to the 3-day time frame, and now let's get rid of the moving averages here and take a look at the Gaussian bands, right? So I want you to notice what happened here. The 3-day time frame is not showing us the after hours trade where we went up to this target here. This green line is represent. I'm gonna make it like really, really apparent, right? And I'll make this one super thin. But this very thick neon green line is where price action went to today, after hours. So I want you to notice here that upon the closure of course, the 3-day time frame as well, we were bouncing right off of the mean band. So that's usually what happens, right? When we bounce out of the mean band from this thing, please. We could face some serious upsides here from that mean band, right? So in fact, this looks very small, but please bear in mind that this move here was it was a 36% ripper to the upside, right? So just upon touches of that mean band, it gets kind of dangerous, right? So even right here, please notice that we got that massive upside there, So that's let's see. From this point here to that point there, that was a 62.5% move to the upside. Very, very, very nice, right? And I mean, look at this here, right? We're on the top side, right? We get this mean band touch, we make another 60% move to there, and then we come back and validate it one more time, and then, you know. So yeah, there could be some very, very powerful moves from the touches of the mean band here, right? So, and we're in fact doing that right now. Okay, so this is based on historical iteration here, but you know, you can already see that this mean band took us to this target right here. There is still a possibility that it can be, you know, even more so parabolic than what we're observing now. Right. So I just wanted to put that out there, right? Because it's very important for us to notice and catch all the details as much as possible. Right. So let's look at the next thing we have. After hours trading, back to the psychological triangle price target. Yeah, we just talked about that being this target right here, right upon the pullback. And then yeah, the hourly time frame real quick. Let's go to that real fast, right? So please notice right up here that the hourly time frame did close with a bullish engulfing candle formation, and that happens when you know, you get a downside here, and then you have a red print, and then you have a green candle printing. You know what? I hate it that we're looking at it like this. It's not on my. There we go. Oh my goodness! Thank you so much. There we go. Okay, so. Yeah. So it happens when the forward candle engulfs, the forward green candle engulfs the prior red one. And I must say that this is not just a bullish formation. It's actually a bullish buy formation, right? So please notice here that this upside here is also paired with a hammer candle after a downtrend. That hammer candle here presents an upside potential, right? So yeah, I'm very much a fan over what's happening here. This is a buy formation candle structure here that is leading towards an upside, and usually the candle that validates the upside continuation is the following candle after the hammer candle, and it just so happens that that following candle made a bullish engulfing too. So yeah, I definitely see some upside coming in for NVOS, but know that at any moment this can capitulate, right? There can be a take profit somewhere from any of the whales trading this thing, right? But yeah, if I were to be very transparent here, I do think that we have the potential to reach that 61.23, maybe even in the after hours trading or the early pre-market, right? And the last thing we want to look at here is in fact the quarterly closure and that is actually the 3-month candle closing, right? So let's go ahead and just zoom in to the price action here, and I want to show you this because this is very powerful. Check this out. So this is an inverted hammer after a downtrend followed by the candle that would validate the continuation to the upside. But remember that the price action already went up. And this is where we're currently sitting right now. So this is all that green. As soon as we open market tomorrow, you can go ahead and refer to the 3-month time frame here, and you'll see all that green all the way up there. So upon the closure of this candle here, that could signal a continuation to the upside here even still, which is why I'm giving you this target right here. 91.58 to 97.32 upon the closure of a very bullish quarterly close, right? It's very conditional here, okay, team? And I would honestly, I would love for us to close this 3-month candle upside of this target here, 43.91 to 42.08. If we can close that upside of there, then actually, hold on. Oh, sorry, it's the high of 53. Where is it? 53.84. Right, okay, so we have to, yeah, closing upside of 53.84. I'm going to make another trend line there, right? So that's going to be the condition here, 53.80. Oh, my goodness. Let's just leave it like that for now. But know that this is, and, you know, I'll even do this to it, right? So quarterly, oh, my goodness. What is going on? Quarterly close above 53.84 as a condition for upside continuation, right? So that could be what's Oh my goodness. I'm like talking and you know how it goes. Right. So continuation. There we go. Okay, so we'll leave that there as far as our notes. If we can close this quarterly, yeah, upside of that 53.84, then that would be a pretty nice, a pretty clear indication that this is going to continue to the upside. And one of the first stops would be that target of 91.58 to 97.32. So please, please, please keep this in mind. I just know that there are a lot of people trading NVOS, and I just wanted to kind of put my 2 cents in there. Okay, team, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 ever, forever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios.